We've all had that moment when we're ready to start saving but can't quite get the ball rolling. Well, today is all about kickstarting our savings journey with some useful tools and insights that can be a game changer. SchoolsFirst Federal Credit Union is here to help you overcome the challenges and share how you can kickstart your savings plan into high gear. Let's welcome Jonathan Wesson, Folsom Branch Manager at SchoolsFirst Federal Credit Union. Hello again, Jonathan.
Hello.
Okay, so we're talking about savings. So many of us want to do it, but it can be difficult. We want to do it, we're thinking about it, but getting started is hard. So what advice do you have for those struggling to take that first step?
Well, the desire to start saving is the most important first step.
Okay, good.
And then I'll tell my members often that the next step is to make savings a priority by paying themselves first.
Okay, can you explain that, the concept of paying yourself and why it's so important?
Absolutely. So paying yourself first is about prioritizing your savings goals over your unnecessary expenses. So for example, most people, when they get paid, they'll go and pay their necessary bills, right? Items are rent, bills, loans, things like that. And then they'll spend the rest of their money on unnecessary items like going out or entertainment. So by the time the topic of savings comes up, there's really not much left to work with. So instead, you really need to change your mindset to have the savings become a necessity of your monthly expenses.
Okay, so it sounds a bit like treating our savings like a non-negotiable bill. So how does this mindset help us achieve our financial goals overall?
Well, so that's it, right? You have to have the mindset of savings is the priority. It's a necessity. So if you want to achieve your savings goals, you need to recategorize that savings as part of your necessity expenses. So when you plan out your budget, you're going to plan out for how much you're going to pay for rent, how much your loans are, and then how much your savings is. Then you can take a look and see how much you have left over to go treat yourself. Okay. Right? Now, the good news is, once you've mastered that and you've started savings, right now it's a great time for savers because interest rates are on the rise. And you're going to be able to find accounts that are going to pay you compounded interest that are going to help you boost your savings goals. Okay,
you mentioned compounded interest. Could you break that down, what that means?
Definitely. So compounded interest is accounts like a certificate of deposit or a money market account. And the magic of compounded interest is that the balance that you have in that account earns you interest. And then each month you get paid interest on the interest that you just accumulated. So your money is literally making you money.
We like that. So starting early with compound interest seems crucial. Can you share some insights on how it can work for us over time?
Absolutely. Starting early is very crucial. And so, for example, let's say I'm 25 years old. I wish. And I wanted to take $2,500 and put it into a compounded interest account, let's say earning 7% annually. If I did nothing to that account and I just left it there, when I turned 65 years old, that $2,500 turns into $37,000. Not bad for just letting it sit there. Now let's take that same example and let's add $25 a month to it. By the time I reach 65, I've now accumulated $97,000 off my original $2,500, right? So yeah, it's pretty magical.
Okay, it makes me, yeah.
The benefit there is just letting it sit there for long periods of time. Yeah. That's the magic.
It makes me think of that saying, a penny saved is a penny earned. Seems like that's applicable here. So before we wrap up, Jonathan, can you offer any additional nuggets, final tips of wisdom for saving to our viewers?
Absolutely. If you happen to be, there's a lot of different ways to save. Yeah. Let's say you're coming up on an annual review and you get a pay raise. Consider taking a portion of that pay raise and adding it to your savings budget. You already weren't accounting for it, right? So it's extra money that you can then plan for, making it a priority. If you're someone who's finding trouble paying themselves first and you need that reminder, set up an automatic transfer to come out of your payroll to that savings account, out of sight, out of mind. We have a calculator on our website where you can look and see what the benefits of compounded interest can help you and how that can help you with your goal. So check out our website at schoolsfirstfcu.org.
All right, all helpful information, and I have to remember, like you said, paying yourself first and not dipping into that.
That's right.
That's like the tempting part. Don't put your hand in the piggy bank. Jonathan, thanks for joining us this morning.
Thank you.
And you can visit one of the many SchoolsFirst Federal Credit Union branch locations as seen on the screen, and you can find out more online by going to SchoolsFirstFCU.org.